In this tutorial, I'll be showing you about equity residential stock. Please type it in Google, press enter. That's the name, full name, and its EQR is a symbol. It's 81.27 US dollar for one stock. It's a billion size firm. It's a big size firm. It's paying a dividend. That's a brilliant sign. Any firm that is paying dividend, that means they're financially very strong because that's extra money of the firm that it pays to shareholder. After paying their liabilities, costs, creditors, they still have extra money. That extra money it pays to shareholders as dividends. Please don't worry, even if the dividend yield is less than 1%, that is a positive sign. That's a strength of the firm because that is the extra money of the firm that it pays to dividend to its shareholders. Click to Wikipedia and see. Search this box. You can see 50 years ago it was founded in 1969, and I want to see what the employees think about this firm. So what I'll do is I'll just copy this exactly from Google. I'll paste it here, type Indeed, I'll type reviews, enter, and I can see we have 390 reviews, 3.9 star. Read through the pros and cons yourself, check out the salaries, the photos, the jobs, the question and answer. Now, I want to see Glassdoor reviews. That's also a very brilliant website for reviews. So we can see 570 reviews, 4.2 star. Read through the jobs, the salaries they're paying, the interview question, benefits, the photos, and everything. Check out the reviews yourself. Let's go to Justia Patents and see if it has any patents or not. So I'll just paste it here, click enter, and I just want to see that if it hasn't. I can't see any patents regarding this. What I'll do is I'll paste it here. I'll type here equity. No, I don't think it has any patents, I guess. Because the firm that has patents, they are very strong in the market. I'm not sure if that's the same patent or not. Let me have a look. Equity Elevator Trading. I don't know if that's the same firm or it's a different. No, I think that's a different firm altogether. But because I'm looking for a company that has patent, that means they're very strong in the market. It's difficult to beat that firm, and but this firm doesn't have any patents. I can't see any patents. But let's go to Yahoo Finance, and I want to see what the key executives are getting as salaries. That's very important for me to know. I'll paste it here. EQR is the symbol of Nasdaq. Go to profile, and let's have a look. So you can see the sector, the industry, and the employees, and I can see that 3 salaries have been shown of key executives. There are 5 key executives, but 2 salaries it says not applicable. That's very important sector. You need to know why it's not applicable. You need to find out why it's not applicable, because we need to know all the salaries, because it's more transparency and we can build trust with this firm. Let's go to macro trend and let's see the ratios. Click price ratio, price book ratio, and paste in the thing EQR, and if the price ratio is less than price book ratio is less than 1, that means stock is cheap, it's a discount. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So let's see after it loads. Okay, right now it's 2.9, which means stock is 2.9 times more expensive right now to buy. If somebody buys right now, they'll be paying 2.9 times more money. It's expensive. If somebody bought in 2011 December, they will be paying they'll be buying, who bought in 2011 December, they paid 1.9 times more money. They bought the stock for, they paid $38 to buy something that was $19 worth. If somebody bought in 2009, they got March, they got 40% discount on the stock because they paid $11 to buy something that was $18 worth, and they got 40% discount. That's brilliant. Right now it's 2.9 times more expensive. Let's go to other ratios. Current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe because it has a good margin of safety. Please look for 1.5 or more than that. Right now, I would say that it's right now it's 1.46, which means stock is 1.46 times more expensive right now. If I see previously, no, sorry, I'm doing it wrong. Apologize. Right now it's 1.46, which means stock is risky because it's less than 1.5. It's a little bit risky, but if I just go in March 2019, it's a lot less than 1.5. So, and you can see vertically up, you can see liabilities are a lot more than assets. It's a very risky stock. And then, consistently, it's a risky stock since 2016 December up till 2019 March because liabilities are more than consistently more than assets. That's very risky. And then there are fluctuations of it above 1.5 for a while and then it's below 1, so which means it's a very risky stock because you can see vertically up liabilities are more than assets. Very risky. So there's no consistency. I would say this is a very risky stock in terms of current ratio. Let's go to debt equity ratio. I'm looking for zero point 0.5 or less than that for it to be brilliant and have a good margin of safety. This ratio will tell me if the stock is mainly operating on debt or equity. Please look for zero point 0.5 or less than that. I can see it's more than zero point 0.5. It's a risky stock. Let's look at the previous trend. Has it ever been zero point 0.5 or less than that? That's my question. I can see that since 2005 up to now, recently, consistently, it's more than zero point 0.5. It's a very risky stock in terms of debt equity. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Okay, it's less than 8%. That means that I'm looking for 8% or more than that for it to be brilliant return, but it's less than 8%. And then there are fluctuations, I guess. For a while, it's more than 8%, then, you know, it's less than 8%. So there's no consistency as such of 8% or more than that. So it's up to you to